Morning, Jeffrey. Erla, good to have you. Jeffrey is excellent. I like it. I heard that in a Mr. Burns voice. Man, good morning, Bob B. the man. Um, that's the one, Jeffrey. Cav got me thinking this morning, and I've said this before. It's just patterns, guys. That's it. It's just patterns. That's what we're going to call today's classroom. It's all patterns. Do you know how often your pattern wins? Because if you do, you might never deviate from your pattern. I'm not going to get all crazy on it, but that's what we're going to do today. Is we're going to just really follow the routine, follow the patterns that we do every day. We're going to talk about advantages. We're going to look at indicators. We're going to recognize those advantages via the indicators and turn advantages into trades. And that's kind of what we do every morning. I see a lot of newer names in here. Is there anyone that's maybe on a demo coming in brand new? I love it when we get it. It's zen. It really is. When you know what you want and you force the market to give you what you want instead of trying to force the market to give you what you want. No, I said that wrong. It's crazy. It's awesome. It's nice. It's relaxing. Trading doesn't have to be stressful. Good morning, Angel. Good to see you. So we're gonna go through and we're gonna do the thing, guys. And we always start at forexfactory.com and check our news because it's important to know when releases are coming out. I don't think it's important to know what the releases are personally. I just want to look at it. Wednesday, March 26th. I've had some medium impact news at 8:30 a.m. Good morning, Joel. Didn't do a whole lot to move the market, but I was aware of it. And if I were in a position, I would have chosen to protect that position just in case there was some erratic movement. At 10:30 a.m. though, we've got crude oil inventories. If you are a crude oil trader, I consider this to be high impact because they're going to release the number of barrels that Donkey Kong can throw at you, and that freaks people out. So that's a good time to go make a sandwich. Good morning, Steve. Good to see you, man. And then everything that I talk about each and every day, straight from the Nexgen page, guys, straight from the trading guide. So when we go to the trading guide, there's a lot of everything in here. There is the trading plan. This is where I get all the stuff to make me appear smart to you guys. This is where all the answers are, all the rules, what they look like. There is a little bit on funding firms there. A little bit on market flow. Everybody wants to be a market flow trader. They believe it's this magic pill that creates trades out of nothing. Not true, guys. I love market flow. I'm a big fan of market flow. But for what we're teaching this morning, you just don't need it, guys. We're going to lay down a foundation. We're going to talk about the best of the best, the easiest to recognize, the fewest amount of rules, and we're going to do it with a high probability trade. This high probability trade is defined. Each indicator on every chart agrees with the rules for the trade. That alone should make you feel pretty good about it. Everything agrees. Everything says, dag nabbit, take the trade. Triggers are their strongest. No termination conditions exist. And there's no trouble spots between your entry and target. Guys, the high probability trade is a trade that is the equivalent to a semi truck rolling down the highway, fully loaded, 110 miles an hour, and there is nothing in the way. It's going to be hard to stop. That's the trade that we're looking for as new users, because this is a trade that typically wins 70 to 80% of the time if you can just follow the rules. This is a trade that creates an enormous amount of confidence in you because confidence is the result. It's the memory of success. And this is the trade that most importantly is going to teach you to read your indicators. You're going to be able to look at your charts and say, wow, I have all this stuff going for me. This is awesome. I'm going to get into the trade. And the cool thing is once you can read your indicators, and it doesn't take long if you keep it focused, and I'm going to help you keep it focused, it's going to set you up for the second trade, guys. It's going to set you up for the trades that you're going to take more often than not. And these are what we call medium probability trades. And these are defined as when most indicators line up for a trade. However, a small issue exists, and you're going to be able to recognize that issue, to define that issue before you ever enter the trade. And notice that issue is singular. This is going to be the vast majority of your trades. And when you take these medium probability trades, you're going to take them and you're going to manage them assertively because you know it's not perfect, because you know you're going to know through your chart reading that there's some problems. Your chart reading will allow you to manage them assertively. Your chart reading will define if there's trouble in the way. And you might take a portion of the position. You may protect yourself just in case that trouble creates problems. So one begets the next, guys. And we're going to take an entire hour this morning. And we're going to learn this high probability trade. This is your foundation. This is your base. This is your core. This is the trade that's going to set you up for future success. Because it teaches you to read your indicators. It teaches you to read your charts. It teaches you to recognize advantages. And then we're going to talk about how to turn those advantages into a trade. You're going to find that chart reading is about 90% of your day. There's a whole lot of doing nothing. Guys, I was up at 5:20 Central this morning. I've taken one trade this morning. I did miss, well, I won't say I missed it. I wasn't in front of my computer. I was saying goodbye to my beautiful wife, so I wasn't there to take the trade. But I was waiting for my rules to be met for an awful long time because my rules are a description. They're a description of a pattern. That's it. A pattern that has been proven to win more than it loses. So every time I take one of my trades, I don't have the fear of win of loss. I know that both are an option, but I do know that if I take that same trade 10 times, the odds are favorable for me to win more than I lose. And that's how trading plans should be developed, guys. 10% of your day will be trading because of the advantages are there, because you have what you need to enter, because the rules are met. And once you can chart read, and I can't stress this enough, it doesn't take long to get good at reading these indicators if you keep it simple. You're going to be able to determine quite a few things. First, where the market is likely to continue. You'll be able to say this is precisely where the market is likely to bounce and continue in the direction of the trend. That's going to be your entries for these trend trades. You're going to understand where the market is likely to go. This is going to help you in determining targets. And you're going to understand where the market is likely to stop. And this is going to do a couple things for you. This is going to have you maybe taking exits, not taking the next trade, or it may have you protecting yourself, moving your stops, making sure that you don't give it all back when you reach one of these likely to stop areas. Those are those termination conditions we talked about. So we're going to take this chart reading and we're going to use it to identify 3 advantages via 3 rules. That's all it takes to identify a high probability trend trade. There's only 3 rules. Each rule, when true, gives an advantage. So the rules are in white. Strong triggers, no termination conditions define your entry. The advantages that they produce are, first, strong triggers will give you the advantage of momentum. Momentum means that the market is moving with ferocity in the direction of the trade or the direction of the trend. And momentum on a large chart is difficult to stop. No termination conditions means that you're not trading into any of those likely to stop areas, which means that with all of that momentum, there's nothing in the way to create a bounce, guys. These first 2 advantages, kid you not, if this were day 1, I believe you could learn to identify both of these inside of 3 days with just a little bit of study, a little bit of extracurricular activity. And once you understand momentum, once you can identify a clear path, world's your oyster. That's the core. That's what's going to take you next level. It's enough to build a trading plan, to have a solid, consistent, profitable trading plan just off of momentum and path. But, you know, happy but never satisfied, we're going to define an entry for you too, and that's rule number 3. Rule number 3 is specific to trend trades. Rule number 3 is just defining an entry area, and that's typically rule number 3 for any trade that you're ever going to have. These 3 rules happen on 2 charts, and you don't need 175 days worth of data and recognize every patterns and swings and flags and pivots and blah. Guys, you need the first bar on a large chart. This leads the way. The large chart is a very slow moving chart. It's a broad stroke of a brush. It really kind of shows the overall opinion of the market. Large chart leads the way. I want you to crochet that into a doily, get it put on a coffee cup, tattoo it backwards on your forehead, and look at it in the mirror every morning. Because the large chart will define the direction of the market and let you know which way you should be trading. It will define the momentum through rule number 1 and let you know if that advantage is in place. It'll also define the key areas that could stop the market cold and create untradeable bounces. That's where rule number 2 comes in for the clear path. Everything gets going on the large chart. 66% of your advantages, 2/3 of your advantages come from the large chart. And once they're in play, you're going to go to a smaller chart, a refinement chart. You're going to take that very broad stroke of a brush that is 1 bar giving you all that great information, and you're going to break it into 20 to 30 bars. Well, the chart will do it for you. But you're going to see the inner workings of that 1 bar. You're going to see down bars and up bars and bounces and fluctuations, and you're going to use that smaller, faster chart to refine your entry, to pinpoint the best of the best spot for entry. This is going to allow you to reduce your risk. This is going to allow you to increase your profit potential, the distance to your targets, guys. And rule number 3 is specific to the entry chart. Rule number 3 shouldn't even be considered until the large chart is telling you that it's good to go. And we use these 2 charts. It's your metaphor of the day, guys. Who am I trading with? Should I be trading with the men and women with the money and the influence to create trends and to establish momentum? Should I try to be in the good graces of the people that react at the key areas and just simply go with the flow? Let them get the work done. I'll hop on coattails, make a couple hundred, and get the hell out. Guys, that's the easiest thing to do because the large chart is the large crowd. They define the direction. They create the momentum. They react at key areas. The small crowd are your fighters. We love the small crowd. They're still way more powerful than you'll ever be. Don't fool yourself into thinking small means weak. There's a lot of money and influence coming from these guys. And they can create what we call retracements, little pushes against everything the large crowd wants. But here's the beauty of it. They fail in their efforts, typically 70 to 80% of the time. Which is why when we use rule number 3 to pinpoint our entries, we are literally pinpointing where the small crowd is most likely to fail. And if they're losing 70 to 80, and they're losing intentionally, don't get me wrong, we can win up to 70 to 80%. We have that potential based on putting the 3 advantages together. So as we move into the day, here's a little what's going to happen. First hour, 20 minutes, who knows, however long it takes. We're going to learn the trigger line of the Fibonacci rules for when it's okay to trade. And I like that phrase a lot, when it's okay to trade. It's okay to trade when my rules are met because my rules are describing a pattern. And this pattern has been tested, it has been verified, and it has been proven to win more than it loses. So it would seem silly not to take it. You guys have the ability to simulate, to practice, to make mistakes, to have victories, to just really go through and become comfortable with pattern recognition. Post your trades in the room. Can't stress this enough. Post your trades in the room. If you think you see a trade, take a trade, post it in the room. If you're not sure if it's a trade, take the trade, post it in the room. Because every time you post in the room, you're going to get a private session with me is the easiest way to say it. So it's kind of like showing up at the tutor. I need to see your work. I need to know what you did. So if you post in the room and you address each of those three advantages, momentum, path, and entry, and you show me momentum, path, and entry, and I think it's important, show me your exit too, because that's where management lessons come in. I'm going to take every picture posted in this room, and in the second half of class, we're going to look at advantages, and most importantly, you're going to tell me what your chart read was. Hey, Mark, this is what I saw. Am I reading my indicators correctly? And it's either going to be a yes or a no. If it's a yes, high five, gold star, good job. If it's a no, well, then we're going to back up and we're going to go to the lesson to make sure that you do understand strong triggers. We're going to go back to the lessons to make sure that you do understand termination conditions, that you do know how to find the best entry, and that you understand the challenges that could stop a market cold, and maybe that's a great place for profit. So every time you post in my room, it is a private session with me. I'm going to encourage you guys, actually I'm gonna beg on bended knee, give me the whys. Tell me why you did what you did, because really what you're doing, and I know why you did what you did. Hey, good morning, Doug B. Is you're creating a recipe. You're literally saying, when I see this and I have that, I'll get in here, and this is my path to success. This is my pattern. This is exactly what it's going to take to get me to where I want to be. So don't skip that step, guys. The people that post the most get to where they want to be the fastest. If you need help finding your capture software, if you need help taking pictures, annotating pictures, posting pictures, I want you to raise your hand today. Let me know. I'm going to give you a plan. I'm going to give you a plan with two trades in it. The first trade is the highest probability trend trade you could ever take. That's your core. Learn that one. And then that's going to open the door for the second trade, which is that medium probability trade that's going to need you to be able to read your indicators a little bit to really thrive. Your job is to know what looks you'll commit to. You have to learn these looks so that they're easy. Don't put the pressure on yourself to be great at this in the first week, guys. That's ridiculous. But these looks can become easy. These patterns can almost be like you're calling your shots, and you begin to anticipate because you know what the pattern looks like. That's what we're going to do, and that's what the second thing to getting to where you want to be ASAP is. You're going to start by posting in the room everything, every question, every picture, every trade, every success, every perceived failure. And I don't believe that losses are failure. They're just a part of trading, and there's always a lesson in them. The second thing is use the spreadsheet that I'm about to drop into the chat box that you should be downloading right now as we speak. Guys, this spreadsheet has been a staple for decades. This spreadsheet has 4 tabs on it the way I've built it. I've expanded a little bit over the years. The first tab that you're looking at, this is the basic rules. So what does it look like to have rule 1 met? Guys, here's 50 pictures of it in the green section. But if my goal is to trade when the rules are met and to not trade when they're not met, I need to make sure that I understand the opposite of strong triggers, weak triggers. I need to be able to identify both and commit to this one. And then if I have to have a clear path, again, recognition. And guys, there's not a lot of pictures here because the recipe's easy. And I also need to know what it looks like when there's one of those termination conditions, one of those areas that could stop the market. So what I'm doing is I am creating this awareness. These are my advantages. These tell me go look for that great entry. These are the disadvantages. These are my advantages gone, and this is that 90%. Sit on your hands, do nothing. The second tab is where I have shamelessly pilfered all of the pictures that you guys put in the room. You drop one in, and you're like, hey, Mark, can I get a chart read? And I'm like, absolutely, let's take a look at it. And it is perfect. It is odds favorable momentum, and it is a clear path, and it is a well-defined entry, and it is beautiful start to finish, and I'm going to steal it, and I'm going to drop it into this green section because I want to use your trade as a study guide for the new up-and-comers, guys. So there's over 500 pictures or 400 pictures from Nexgen users embracing advantages and finding a way to capitalize in their own way. There is the textbook, High Probability Trend Trade Entries, long and short. There is pictures for the management plan that I give you and the plan that I give you. There's ideas on when you can begin to manage a little differently as you learn to read your indicators. There's a whole section dedicated to patterns that you're going to start to recognize once you get outside of the very basics. And they will. They will jump off the page at you. And there's a lot of patterns that may adjust your plan, that may adjust your management, that might change your entry thoughts. So once you get out of the basics, you're going to become a chart reader and you're going to start to see things. So your job is to build your plan, to grow outside of the plan I give you, to take your chart reading and find the things that you're comfortable with. And it's amazing how the human brain works, because some people can't see short trades. It's the craziest thing. They only go long and they skip every short trade. Some people are just the opposite. Some people just don't like trend trades and they prefer momentum style trades. And some people want to counter trade. And that's not my job to tell you what to do, but you have the ability to take a lot of pictures as you build your plan. And even as you build your plan, post all those pictures in the room. Get a little feedback, guys. Been doing this a while. There's ways to manage trades. You're going to find your best way. And you're also going to recognize your patterns, things that appear to you. And then finally, there's the trade tracking sheet. And I think that if you ditched every sheet on this tab on this spreadsheet except this one, you'd still be in a good spot, because this is your trade journal. And it does a couple things. There's the picture slot, and that's where you're going to drop in your picture. Hey, here's a short trade that I took. Check it out. Right? And there it is. And there's all the rules met in a beautiful trade. Whoops. And I had these two advantages, those core advantages, the best and the best advantages, the ones that are going to carry me next level. And then most importantly, when I dropped it in the room, this is what Mark said about it. This is the feedback that I got. This was what was good, what was bad, what I could do better, what could reduce risk, what could increase profits. This is what's going to take you next level, guys. Because if you wake up every morning, and I hope you do, I hope you wake up every morning, and you just look at what you did yesterday, and you say, hey, what worked, right? Following my rules worked. Managing aggressively on medium probability trades worked, right? And you're going to see what doesn't work. Well, trading in determination conditions keeps pulling money out of my account. Getting in on the wrong side of the triggers keeps pulling money out of my account. You're going to start to recognize the patterns that are bringing you success, not only in the market, but also in yourself. And you're going to find the patterns that are robbing you of success, not only in the market, but also in yourself. One thing that's very, very true is everybody has a thing. Everybody has a rule that they like to break, or a management skittish flaw, we'll say. And guys, if you drop 3, 4, 5 pictures in the room, I'm going to recognize what your thing is, and we're going to work together to overcome it. Most people, their thing is trading in determination conditions, because termination conditions are going to force you to be patient. So I see it a lot, and I see a lot of losing trades from it. So every time you do it, we'll talk about it. And remember, squeaky wheel gets the grease. So over the next hour, Bob, that's all of us. That is all of us. I will admit every mistake that I've ever made, guys. And know that this class is taught really based on my mistakes, the things that I found challenging, the things that I overcame, and I'll give you everything that I used to overcome them. I am not a genius like my brother, but I'm pretty good with patterns. So over the next hour, we're going to learn the rules. You guys are going to simulate and practice, guys. Get comfortable with NinjaTrader on Simulator. Get good at it so that when it's time to go live, it's all second nature. We are going to simplify. We're going to discuss a couple looks, how to identify them, how to study them. And by the end of this first hour, hour and a half, however long it takes, I don't have a time schedule, you will have everything that you need to be successful with this software. So I'm talking to all of you in the room. If you're not finding the consistency that you wish you had, slow down for a second. Stop looking for every trade. Let's look for the best ones and then rebuild the foundation. If you're brand new, do yourself the favor of not looking for all the trades. Keep it simple. Keep it focused. And you'll get to where you want to be. And Bob, you said when you lose a trade, 95% of the time it's into a termination condition. I think that's a pretty fair assessment for most people in this room, because we say things like it should, it has to, it needs to. And the reality is we'll never be in control of the market. The only thing you will ever be in control of is whether or not you follow your rules. So let's get going. What am I looking at? Well, both charts have triggers, small and large. Small triggers are solid lines, large triggers are dashed lines. No matter what chart you're looking at, guys, know the difference between the two. Fast, slow, small, large. They're green when we're going up, they're red when we're going down. It's a pretty simple lesson. You're going to use trigger lines for everything, though. You're going to use it to define rule number 1 and establish that momentum. You're going to use it for rule number 2 to make sure you're not trading into termination conditions. And you're also going to be using it to define your entries. So Lonnie, I love this question. Hey, I need a critique on this. Didn't have a weak bottom, you had a strong bottom. Let's talk about how the second half goes, right? You absolutely had momentum, and it looks like you had the potential to break. With no divergence, you take the perfect entry, you make $100, and then, I don't know, if you got out at that big red fib that said it might stop the market, it looks like the perfect trade, Lonnie. I can't find anything wrong with it. Is it no clear path because it's into a termination condition? Or is it no clear path because it only has the potential to break? That's the only part of this that I need you to really define. And we'll come back to it. We'll come back to it. But guys, that's what we're going to do. Is we're going to learn some rules, and then we're going to go back to everybody's charts. But you don't ever have to tell me you need a critique. I promise you, you will get a critique. So guys, know the difference in the trigger lines. Be able to name the areas that are on both charts. Just horizontal lines on a chart, guys. Magenta highs, divergence lows, which are cyan, Fibonacci resistance, Fibonacci support, yellow 1-to-1s, mid-bands. All these lines on a chart have a name. They're going to be on the large chart, they're going to be on the small chart. On the large chart, these are the areas where that large crowd make decisions. These are the areas that could stop your forward progress. On a small chart, some of these areas are going to be exactly what it takes to get you into the market to continue with the trend. So just know the names, and we'll talk about where to use them. But we're going to start on the large chart because the large chart leads the way. And the large chart must have strong trigger lines. What's a strong trigger line? Well, it's the thing that gives us momentum. And the only way you can have strong triggers is if you're trading with the trend, guys. If you're going with the large crowd. So whatever the background color is on the first bar of that large chart, if it's green, the market's going up. If it's red, the market's going down. It doesn't mean jump in, oh my gosh, it's going to go. It means, hey, look for rules to be met for long trades. Look for rules to be met for short trades. And rule number 1 can only be in play if the colors match the background. Triggered color matches the background. So when my background is green, small and large must be green. When my background is red, small and large must be red. And strong triggers means that the small triggers in an uptrend are above and have broken away from the large triggers. The large triggers are wide, and it's the space created between small and large. I want you to picture scissors that have just opened up and are ready to cut. Guys, this is your strong trigger look. And in a downtrend, it's the exact opposite. Smalls are below the large. Large are still wide. But there is space created between the small and large, like scissors that are open and ready to cut. And guys, when I have strong triggers, the odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum is our battle cry. You're going to see it annotated on charts, OFM, odds favorable momentum. And guys, this is strong triggers, and this is always strong triggers. And if your small triggers work their way back inside of the large, this is weak triggers. The opposite of strong is weak. And when I have weak triggers, anything can happen up or down. This is where bigger retracements from the middle of nowhere can happen. This is where key Fibonacci areas tend to hold. So when we talk about momentum, guys, let it be one or the other. Let it be black or white. Let it be strongest triggers ever, best advantage, momentum on the table. Or if it's weakness, be willing to sit still, be willing to do nothing. And I'm going to bring up this picture just because it's fun, guys. This is my Rule 1 picture. I haven't shown this in a while. But it kind of shows how you're going to see momentum throughout the day. You might have strong triggers over here on the left, and then the smalls work inside of the large, and you have those anything can happen triggers. We'll call it ACH. Annotate it on a chart, ACH. Because if you associate this look with those words, it's hard to risk your money in a scenario when anything could happen. Even without the benefit of Fibonacci, there's a reversal with those weak triggers, and it does create strong triggers. And you see that one bar, that big old tail on the large chart? Guys, these tails are potential entries on that smaller, faster chart. That's the retracement. And every time you see odds favorable in one of these tails, know that there may have been an opportunity. And the market continues up, gets that weakness again, another reversal, odds favorable, another tail. And then we get into the transition phase. We get into a situation where the larger red and the smaller green, or when the background is green and the triggers are red. And guys, this is the buyers and sellers. These are the people in control of the market fighting, duking it out, trying to figure out who's going to win, who's going to take control, who's going to establish the trend. And guys, there's no reason to get caught in their fight. This is like two pit bulls going after a slab of bacon. But this is where a lot of new users are very tempted to predict what's going to happen rather than say, I'm going to sit on my hands. I'm going to wait for that advantage of momentum. I know it's coming back. And once I have it, I'll go through the process of looking for a trade. So odds favorable momentum, guys, leads the way. Open scissors. Is everybody good with that? That's your first rule. That's a pretty important rule because there it is. Separation between the small and large. Smalls above the large. Space between the two. The odds are favorable for this market to continue up. It's only rule number 1. There's those strong triggers. Strong triggers can break areas. There's some of those tails, potential entries. There's that weakness, and that's where the reversal comes in. So guys, rule number 1 is rule number 1 for a reason. When you have the advantage of momentum, it is hard to stop the market. But termination conditions can do it no matter how strong the momentum is. So we're going to avoid them. We're not going to trade into a brick wall. And when termination conditions are false, when there's none present, you're going to have room to targets. And we're just going to call it a clear path. How easy is that? Does anybody not picture absolutely nothing in the way when you say clear path? What is a termination condition? Well, it's a Fibonacci-based indicator that may reverse the market, guys. And it's a comparison of that area and the triggers. And when I say a Fibonacci area, it's a horizontal line on the large chart, guys. It is a divergence high. It's a divergence low. It's Fibonacci resistance. It's Fibonacci support. It's yellow one-to-ones. And these are the areas where the large crowd makes decisions. These are the areas that are most likely to stop a trend, to create an untradeable bounce, to create a reversal. So, to identify a termination condition, the first thing you're going to do is you're going to let the large crowd get there. On your large chart, price must reach resistance. Price must reach support. When I say price, I mean these dynamic Renko bars, these price bars. That is a reflection of the price in the market. And when it reaches Fibonacci support, when it reaches Fibonacci resistance, we are done with price. That's all we need. We need it to get there to set off the decision-making point. And then all you have to do out loud, scare the pets, where are my triggers? Price reached resistance, where are my triggers? Well, if my trigger lines, small and large, remain below resistance, resistance is a termination condition. If I reach Fibonacci support, Where are my triggers? If small and large are above Fibonacci support is a termination condition. Absolutely no trades. Absolutely no trades into the area. Rule number 2 is not met. Light bulb's going off, Lonnie. I love it. Everybody gets the light bulb at a different time. So I'm glad that happened. So here's the reality of these areas, guys. When price reaches an area, it could stop the market. It could create a very untradeable bounce, which means you might get only 2 or 3 bars off of it, and maybe it continues again, but that 2 or 3 bars will be enough to take you out of a trade. It could create a fight between buyers and sellers where you see this little seismograph action right at the decision-making point. And then sometimes it could break. It could actually just keep going up, or it could reverse the market completely, making those large triggers go from green to red. And if a termination condition where none of the triggers get through it, if it reverses the market, whether it's red to green or green to red, guys, that's what we call a strong top. And a strong top is the precursor to the highest probability trend trade. It's rule number 1 for the medium probability trade I'm going to give you. So understand that these areas are powerful. These areas are where decisions are made. These areas have the potential to absolutely stop the market cold. Those are yesterday's markings. So look at that. Straight to resistance, that's where your reversal happened. Let's circle that tail and we'll come back and revisit it because that could have been a high probability trend trade short. But look at the little bing, bang, boom in between fibs, guys. That's the fight between buyers and sellers. Support stops it. Resistance stops it. Support stops it. Resistance stops. No way. Support stops it. Resistance, support. Divergence high. Egads and little fishes. Is it possible that understanding exactly where the market may stop and bounce could play a huge role in your trading, create a huge advantage, keeping you out of trouble, keeping you out of problems? The answer is yes, guys. It was rhetorical. Is everybody good with that? Give me a why. Price reaches, triggers don't break. Sit on your damn hands. Do nothing. Wait for the reaction. You'll never know what the reaction's going to be. It might break. And if it does, it's going to look like this. So I've numbered these because, numbers make things easy. Number 1 is price reaches resistance. All the triggers remain below. This is a termination condition. Wait for the reaction. Let the large crowd dictate. You don't have to predict or hope or wish or want. Guys, just let it happen. An area will always be a termination condition, even if it's for a second. Maybe the market is screaming. You hit resistance, you're like, whoa, pump the brakes. Doing nothing. Let's see what happens. Well, that area of resistance will never be considered broken. It will never be considered a clear path until both the small triggers and the large triggers, both lines of each, hey, good morning, Miss Cindy, get above resistance. And when they get above resistance, guys, your path is clear. And when your path is clear and you have momentum, we're going to go look for entries. And these are the 2 that get you going as a brand new user. Learn how to be patient, right? Bob said 95% of his losers are trading into these areas hoping they break. Allow them to break as a brand new user. Insist on that clear path. Give it a week. And what happens is it sets you up for the second trade. So number 2 here, notice the pause button because you got to think about a few things. Number 2 is showing the potential of an area to break. So first it's a termination, and then when those small triggers absolutely smash through an area, and guys, embrace that word, smash. I don't want to see a little prairie dog. I want both lines 3 to 4 points above that area. If you have strong triggers, if you have odds favorable momentum, this area has the potential to break. This is what we call a 50-50 look because 50% of your triggers have gotten above resistance, but 50% of your triggers are still below. This is going to be your first medium probability trade. This is going to be the majority of your trades, but it's only potential, so it's not a clear path, so you're going to manage it a little more assertively. Termination first, let it be, relax. There's so many opportunities in the market. Potential to break. Let's look for opportunities, manage them aggressively. Clear path. Love it. This is the best of the best, guys. And your path remains clear until you reach the next area. And then we go right back to number one. So let's go look in a live market just for grins. There's a whole lot of termination conditions. That one had the potential to break, but it didn't. Weakness keeps you out of that loser. Potential to break, but didn't again. Oh my gosh. Beautiful termination condition. Look at that. Support becomes resistance when the path is clear. There's one of those entries. A lot of you guys took this one yesterday. All the way down to weakness at support. Weakness creates a big retracement right to one-to-ones. Support breaks, or resistance breaks, becomes support. Look at that, to the tick. And guys, we are currently weak triggers at fibs, which means we are currently sitting on our hands waiting to see what happens. It's pretty special that you guys know where these areas are, and now you have a recipe to avoid trading into them. But this is going to be your patience piece, guys. This is going to be your 90% piece, because there's going to be times when the path isn't clear because areas are stacked. You might have 10 fibs, 2 ticks apart. I don't know. Probably not like that. But from termination to termination to termination. And it's going to be frustrating. And you're going to feel like you'll never get a trade. And you're going to say, well, I'll go ahead and break my rules this one time and hope that I am the golden child and this area will magically break for me. And guys, it's okay to do nothing. I can't stress that enough. It's okay to do nothing, because trillions is what is exchanged in the futures market every day. Billions an hour, guys. And rule number 2 is rule number 2, because 28 years of study has proven that these stop the market more often than they break, create an untradeable bounce more often than they break, no matter what the momentum is going into them. So if you learn to respect them, identify them, guys, it's going to keep you in a situation where you're not taking avoidable losses, and you're not having to take those great trades to make up for your avoidable losses. The easiest trades come with momentum, trading away from Fibonacci and trading to Fibonacci, guys. And out of all those billions traded hourly, if you can consistently capture $400 a day, you're a 6-figure day trader. That's all it takes. And most people don't realize it's that little to put you in such a great position. So that's termination conditions on the large chart. Horizontal lines can stop forward progress. But the large chart's slow moving, guys. So sometimes we rely on the small chart to give us a heads up. And your small chart will show change that you can't see on the large chart. Inside of this one bar on the large chart, all of these bars on the small chart, that's your refinement process. So your small chart might show you 3 divergences, 3 cyan lines from a low, 3 magenta lines from a high. 3 divergences in the same price range is the only termination condition on a small chart. 3 divergences in the same price range tells you things might be changing on that big slow chart. No more short trades. Guys, the advantage of a clear path is gone as soon as that 3rd divergence prints. And you'll use the concept of small and large triggers must break that divergence low for it to no longer be a factor. So 3 divergences may create an untradeable bounce, might reverse the market completely, could create a fight, and you'll see those happen a lot right when the market is dissecting key areas. But this is the look that says, hey, no more short trades. And if you were in a short trade, this is the look that says, hey, let's exit that short trade before they come and take our money. So here we go. Rule number 1, large chart, strong triggers, advantage of momentum. This is in play, 100%. We have it, we're good, we love it. Can't wait to embrace it. Rule number 2 is going to make sure that we have a clear path. Absolutely nothing in the way. And guys, when these 2 rules are met, we're going to instill a little precision into our trading. Rule number 3 is the small chart rule. Rule number 3 is a refinement. It's going to pinpoint where the small crowd is most likely to fail. It's going to pinpoint where the market is most likely to bounce and continue with the large chart trend. And rule number 3 is so specific, so precise, that you're going to use a limit order to buy or sell a pullback at an area inside of triggers. You're literally going to wait for the market to come to you. You're going to buy it when the small chart is going down. You're going to sell it when the small chart's on its way up. But you're going to do it and have that limit order waiting at an area, at a fib, at a mid-band, at a yellow 1-to-1. Because the same way areas on the large chart can stop forward progress of the trend, areas on a small chart can stop that little retracement that the small crowd's creating and create a bounce to get us going back with the large chart. But there is a very important part of the equation. Those areas need to be inside of triggers, guys. They have to be inside of large triggers. So both charts have large triggers. We've taken the large triggers from both charts and put them on your entry chart. So there's the 5-1 triggers, large. They're smooth. You're going to use those in a comparison to see those open scissors to let you know that you have odds favorable momentum on a small chart. But you also have the 13-2 large triggers. These are called the synthetic triggers because they're pulled from a different time frame. They have little steps on them. But it doesn't really matter which is which, because these 2 sets of large triggers, guys, they define where the retracement is most likely to go. Price returns to large triggers. So when you look at your entry chart, from the highest line of the large triggers, whether it's 5-1 or 13-2, to the lowest line of the large triggers, whether it is 5-1 or 13-2, that big white box shows you where this retracement has the potential to go, where it's most likely to go. But that's a pretty big gap sometimes. The easiest, the highest accuracy, the lowest risk look is going to be what we call favorable large triggers. This is the easiest for new users. This doesn't happen as often as this. But remember, we're trying to build confidence. We're trying to get that confidence through the memory of success. When you have favorable large triggers, it means that those large and synthetic triggers are overlapping, one on top of the other, like 2 snakes riding piggyback. And because they're overlapping one on top of the other, the tighter they are, the smaller the range is where that retracement's most likely to occur. And then when you put a fib, a mid-band, or a yellow 1-to-1 inside of it, the smallest the zone is where the market's most likely to bounce and continue with the trend. So brand new users, if you buy or sell a pullback at an area inside of favorable large triggers, this is going to give you the smallest little window of opportunity for entry, and it's typically going to give you the least amount of risk. So we're going to go through the process of defining our entry. And it starts with the large chart rules being met. I can't stress that enough. Momentum and path, momentum and path, momentum and path. Guys, say it every day. And we're going to look at it on every chart posted. Momentum and path. We're going to talk about it. And when that large chart says up, strong, nothing in the way, your small chart is going to be screaming north. And that little fear of missing out is going to start tugging on your earlobe saying, hey, let's just jump in. Hey, it's going without us. You're not making money. You're not getting paid. You're going to live under a bridge and eat beans with a stick. And you've got to squash that voice, because patterns repeat themselves. And the beginning of your pattern for entry is a reversal bar. This reversal bar signals the beginning of the pullback. This reversal bar is letting you know that the retracement is on its way. That's the beginning of the small crowd fight. The reversal bar is not your entry. When the reversal bar prints, you're going to remind yourself, price tends to return to those large triggers. Let me find them. I have large triggers and synthetic triggers on my entry chart. So from the highest line of the triggers to the lowest line of the triggers is where the market is most likely to retrace. You don't know where in that zone it's going to go, but you do know that somewhere from the top line to the bottom line, the potential for the market to retrace is there. And the tighter they are, the smaller this area becomes. But trigger lines aren't bouncy. Trigger lines don't create ricochets in the direction of the trend typically. We need an area. You need an area. So once you identify where the market may return, you need an area inside of triggers. Areas can be fibs, midbands, or yellow 1-to-1s. Memorize that list. But they have to be inside of that retracement zone, inside of triggers, guys. So this box, the much smaller box, the more refined box, this goes from the highest area inside of the triggers to the lowest area inside of the triggers. And this shows me where the market is most likely to bounce in the direction of the trend on the large chart. Guys, you have just defined where the small crowd is most likely to fail. You have defined where the trend is most likely to continue. You're going to wait for the market to get to that point. You're going to activate a limit order 2 ticks above the highest point inside of triggers. Because remember, the large chart has odds favorable momentum. The large chart has nothing in the way. We're not going to stumble over a couple pennies hoping to save a few dollars by getting in at the mid-band. We're going to get in 2 ticks above. And you're going to say to yourself, I've done all I can do. I've insisted on trading with the trend. I have demanded strong triggers. And I refuse to activate that limit order without a clear path. It's up to the market now. Whether or not I get an entry is up to them. But if they come for you, if they hit that limit order, you're in a long trade. You bought the market. And you didn't just jump in hoping it goes up. Guys, you have the advantage of a market where the odds are favorable for it to continue up. You have the advantage of a market with all that momentum and there's nothing in the way to create a bounce. And you got in precisely where the market is most likely to continue with that trend based on a pattern that has been verified and proven to win more than it loses. Guys, this is your high probability trend trade entry. So learn the rules for it. Everything says up, you have momentum, the path is clear. The reversal bar begins the pullback. If you got worrisome and jumped in somewhere over here, this reversal bar is an awesome exit. And then you're going to define where the retracement is most likely to go. You're going to define where it's most likely to bounce. I like to call this the window of opportunity. Ric Flair fans will know it as the woo. Activate a limit order 2 ticks above it. And then just wait. And say to yourself, they have to come get me right at the best spot or I just don't want this trade. And what you're going to realize is that when you can define where the retracement is most likely to occur, when you can define where it's most likely to bounce inside of that retracement zone, you have zero interest trying to enter the market on the other side of those triggers. You have zero interest trying to enter the market beyond that window. You have zero interest in being in a trade when you are on what we call the wrong side of the triggers. Because once you're down here, the advantage from rule number 3 is gone. Once you're below the triggers, guys, you don't know if, when, or where that market is going to continue up. This is the wrong side of the triggers. So we make money both ways. Isn't that great? Everything says down on the large chart. The path is clear. Life is good. Birds are singing. And you wait for the reversal bar. And you don't enter on the reversal bar because this has you looking for the retracement zone. But you don't enter when price hits the retracement zone. You define where it's most likely to bounce. You activate your limit order 2 ticks below, and you say to yourself, I don't want to be in a trade on the wrong side of the triggers. I don't want to get into a trade beyond the retracement zone, beyond the areas inside that create a bounce. And guys, you're going to use that concept of being able to define where the market is most likely to continue to define where the market should not go. And this is where your first stop is going to go. We haven't even discussed management. This is your first management lesson. Initial stops are placed where the market should not go. Embrace that language. The advantage is gone on the wrong side of the trigger. So your initial stop will be generally 4 to 5 ticks above the trigger lines. 4 to 5 ticks below the trigger lines. And you're going to say to yourself, anything that wins 70 to 80% of the time, Any pattern that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. So there will be times where you have odds favorable momentum. And there will be times where you have the clearest path ever. And there will be times when you take the perfect entry just above support inside of favorable large triggers, and those sons of bumpuses push 4 to 5 ticks below. And instead of hoping the market continues from somewhere down here, you can take a small, little, acceptable loss. Cav, thank you for this picture. Cav posted this in the room. Guys, this is the perfect high probability trend trade. It just didn't work. And there's one of those medium probability trades with the potential to break. Lonnie took this one and managed to make an awful lot of money. Nicely done, guys. So we're learning the pattern. What is the pattern? The pattern begins with trading with the trend. The pattern insists on having strong triggers. The pattern is dependent on a clear path. And guys, when that large chart's ready for you, it's trading all the way up here. Way away from those areas. And you're going to say to yourself, I've only got $80 worth of profit to get to that trouble. And this is a little nerve-wracking. And then you have to remind yourself, I'm not getting in at the top of the bar. On this big slow chart, that's the reversal bar. And that's not my entry. And I'm not even getting in at the triggers. That's not my entry. My entry comes from the areas inside of triggers, which means that instead of having only $80 worth of profit potential to that area, suddenly you have 300. And you know where your stop goes. So when you wait for the best entry, you reduce risk. When you wait for the best entry, you increase profit potential. And guys, that's our first hour. That's what we talk about every day. How do I find a high probability trend trade? How do I recognize when a market is most likely to continue from a spot? One relies on momentum and one relies on trading with the trend, Lonnie. The momentum trade is going to be it's going to be a little further down the line because a momentum trade is 100% dependent on odds favorable momentum. And the way Nexgen teaches it, you have to be able to recognize a strong top. You have to have momentum on the small chart, but your entry isn't going to be a pullback to areas inside of triggers. It's going to be a very fast snap back to a fib or a 1-to-1 or a mid band. And it takes some pretty good timing and some quick recognition. The trend trade is a slower moving, easy to define trade. We did some examples of momentum trades yesterday. We can do them again today. If we see some, we'll talk about them. But let me go through this real quick because this is what I wanted you guys to see. Odds favorable, clear path, and it pulls right back to a mid-band inside of triggers. And because the small and large got below the first divergence, it was only 2, not a termination. Guys, that's your pattern. And you can scroll back, and every time you have momentum and at least the potential to break, circle a tail. And there it is, right back to support, right in the retracement zone. And there's another one with the potential to break. Whoops. And it pulls right back to support, right inside of the retracement zone. And there's another one with the potential to break, tail into momentum. And it pulls right back to support, right inside of triggers. Pretty cool, right? Over and over, ladies and gentlemen. This is your pattern. Over and over. So that's the high probability trend trade, guys. This is what we talk about for a full hour every day. If you're brand new, this is the easiest way to get to where you want to be. Lonnie, this is the easiest way to begin to recognize the trades beyond. But I'm going to encourage you guys, make this trade, make the recognition of these advantages second nature before you try to find more trades. Because what you're going to do is you're going to begin to confuse rules, both for entry and management. You're going to begin to mesh them together like some sort of crazy love child, and you're going to take your momentum rule and apply it to a trend trade rule and you're going to manage it like a medium probability trade rule, and it's going to create challenges. So get really good. Get really good first at recognizing large chart advantages, because these are going to work into everything. Know the difference between strong and weak triggers and between a clear path and terminations. The fastest way to do that is to take pictures. Take pictures of strong triggers. And instead of just taking the pictures, say, check it out. This is a strong trigger. This is momentum. This is rule number 1. This is always my look. And if you do that, if you take the time to explain, it's strong because they're separated. It's strong because the colors match. It's strong. This is odds favorable momentum. This is rule number 1. You're not going to confuse it with weakness. You'll never accidentally trade without strength, because you'll know exactly what strength looks like. And the same is true on clear path and termination conditions. You can get to a point to where you can clearly define a termination condition, to where you can clearly define a clear path. And this takes a little longer because there's more moving parts, and that's going to open the door for that potential to break. And you have to be able to say this is only potential. So take 25 pictures of each, annotate them, talk about them. Why are they advantageous? Why are they disadvantageous, right? Get them in the spreadsheet. And guys, commit 10 minutes before every trading day. Commit 10 minutes while you sip your first cup of coffee to looking at these pictures, going, all right, today, this is what I'm looking for. I'm looking for the smalls below the large, all triggers, background red. This is strong triggers. This is odds favorable. This is rule number 1 met. And for the love of fuzzy, I'm going to avoid when my small triggers are inside of the large triggers, when the scissors are closed, when anything can happen, when rule number 1's not met. And it's going to set you up, guys, and it's going to get you where you want to be. And if you're really brand spanking new, I'm going to give you pictures of what it looks like. First thing on the checklist that you get is it's going to ask you, is the market coming from a strong top or bottom? Was it a no triggers through termination that reversed the market? Guys, if it was, outstanding. It adds a lot of warm fuzzies to that trade. If it wasn't, it's okay. You can still take the trade. It's going to ask you, do I have odds favorable momentum? It's either separation or it's not. It's black or white. It either is or is not. If you do have it, this is your flow chart, you have to make sure that you don't have a termination. You have to be able to identify whether it's a clear path or not. And you got to know where to enter the market, guys. So these pictures are going to help you with the very basics. And then this high probability trend trade checklist, this is going to give you the opportunity to print this out, to put it on your desktop, and police yourself every trade you're looking to get into. This is the same checklist that nobody in the history of the checklist has ever done worse than 70% if they followed it truthfully, guys. You can laminate this, take a look at it, answer yes to all of them, and I think it's a pretty good thing. Write these on the chart. Talk about on every chart that you post in this room. Tell me where it's coming from, whether you think it's a strong top or bottom, whether it's important to you or not, because it's going to work its way into your plan. Talk about the momentum, whether it's strong or weak. Talk about your terminations, because when you know what you're up against, you know how to manage. And guys, use the language area inside of triggers for entry. And what you'll find is those damn losers from the wrong side of the triggers are avoidable. And then finally, I'm going to give you the KISS plan. Promised you everything. Guys, this is your stepping stone. This is your first trade. This is the trade that teaches you to see the other trades, because it's teaching you to read your indicators. This plan optimizes your chances of success with the high probability trend trade as a new user. And then my favorite phrase, through simulation, study, class feedback, and continuous practice, you'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. And Lonnie posted in here, and Lonnie, thank you for that. Glad I listen every day. It's beginning to sink in and learn something new every time. Repetition is the key, guys. Repetition. Stop believing you're going to be a successful day trader in your first 6 days. Put the work in. Listen. Ask questions. Lonnie, you're doing great, by the way. There's two things you guys have to know before you enter. Why you're going to enter, because my rules are met, right? Because your rules are describing a pattern that has been proven to win more than it loses. Your rules are describing a pattern. That's all it is. You 80s kids will dig this one. It's just a pattern that proves to win more than it loses. Everyone remember Pac-Man? Avoid the ghosts? Pac-Man, Space Invaders, Asteroids, Centipedes, Scramble. All of these had patterns that brought you success as a 12-year-old pimply-faced kid with a pocket full of quarters. The market's no different. Find your pattern, commit to it. And then you'll exit a trade because you hit a profit target or because your advantages are gone. If I enter a high probability trend trade and it goes 4 to 5 ticks beyond those trigger lines, I'm out. My advantage is gone. 3 divergences print, I'm out. My advantage is gone. Hits a termination condition, I'm out. So guys, define your entry. Great entries create very manageable trades. They reduce risk. They increase profit potential. And then you've got to manage it once you're in. What news is at 10 o'clock, Kev? Low impact, right? You got me worried now. We have inventories at 10:30. Guys, your management plan for brand new users, if you're trying to overcome the emotion, the fear, the greed, the angst, the adrenaline, let your management be every bit as mechanical as your entry. Force it to be if-then and follow it religiously until you build your own management plan. And you will build your own management plan based on your ability reading the indicators. But until you can, let it be easy. 2 contracts. KISS management is going to teach you where to put your stops, and it's going to teach you how to get paid. And it all begins with entering where the market is most likely to continue. So if then, guys, if entry is 2 ticks below resistance inside of triggers, then initial stop is 4 to 5 ticks beyond the triggers. It's that simple. Put it there, sit on your hands. This is where the market should not go. You're going to know your risk before you ever enter a trade. You're going to know how much risk you're going to have on a trade before you ever enter it. You can choose whether or not you want to take that trade. And guys, let me show you something. Paul is the prime example. Paul says, this is a medium probability trade. My window is pretty large. If they don't get me at the bottom of the window, I simply won't take the trade. He knows where his risk has to go, so he can make decisions based on whether or not he's willing to accept that risk. But what he doesn't do, and what you shouldn't do as a brand new user, is he doesn't put his stop inside of the triggers because that's where the retracement may go. And he doesn't put his stop at an area inside of triggers because that's where the market may go and create a bounce. So if you're not willing to put your stop where the market should not go, don't be willing to take the trade. Targets are predefined at $100 and $200. And if they don't stop you out, if it's not that 20 to 30%, you're going to get that reversal bar in the direction of your trade. And once the reversal bar prints, you're going to redefine where the market should not go. It should not go 2 ticks above that reversal bar, 2 ticks below for a long. So now, instead of $150 risk per contract, you're down to $30 per contract. And that feels better. And now there's nothing to do. It's either going to stop you out or it's going to go to your first target. And if it goes to your first target, it's only $100 away from your amazing entry. 10 ticks on crude oil, 8 ticks on the S&P. And if price reaches your first target, guys, 1 contract is automatically removed and those funds go into your account. You are now a winner. You have just experienced success. It's breeding confidence. Your sweaty palms aren't as sweaty. Your pulse is dying down. Life is good. And you're going to move your stop to break even. You're going to have 0 risk on a trade and you've been paid. And that's going to help you develop the courage to hold for the second target, which is only $200 away. Which means that if price reaches your second target, guys, you're going to be removed from the position with a $300 profit. You're going to be out of the position It doesn't matter what happens next. You're done. That's it. You have to wait for the next trade. And there's a lot of people with this misconception that $300 isn't enough. Well, Mark, I can't make a living off $300. Mark, $300 is insignificant. I make that by lunch in my job right now. Guys, this is 4 minutes. This is 4 minutes of your day. This trade here, that's gold, from 21.10.3 to 21.12.3, this is $300, and that trade appears to have taken about 17 seconds to completion. Is that right, Paul? About 17 seconds for $300 in your account? Oh, that's the RTY, 150. So guys, remember, it's not catching all the trades. It's catching the best trades. It's knowing where the market shouldn't go, and it's being willing to exit your position with profits. And if $300 a day is the best you can do every day, that's the wrong one. 75 grand a year. 400 is 100. 6 figures, guys. 6 figures. From potentially 5 to 10 minutes of your life every day. That's it. Waiting for the best of the best. So, I promised you everything that you need, guys, and I'm going to drop it in here right now. It's a zip file, cleverly called Everything You Need. Inside of that zip file is Chart Reading 101. Learn to be a chart reader. Ask for help if you need it. High Probability Trend Trade Checklist. Know what it looks like when your rules are met. Ask for help if you need it. The KISS plan, which teaches you not only how to enter, but initially how to exit, and also has a second trade for that potential to break with a different set of rules and a different set of management. Ask for help if you need it. And then it's got, I don't think that one's in there, daily goals. And then finally inside of there is this one. And this is everything that we've talked about in the last hour. And I'm going to drop this in the room on its own too, in case you guys don't like downloading zip files. Guys, this is how I teach, what the rules are, where to find them, what the indicators are that you're looking at. And then it goes through identifying a high probability trend trade step by step, all the way down to circling those tails so you can study. Everything that we just talked about in the last hour, consolidated, condensed into only 2 pages to keep it as simple as I know how to keep it. So, you have everything that you need to be successful. You've been given the rules. You've been given how to identify them, how to study them, a spreadsheet where you can track everything that you do and go back and review. You have the ability to simulate, to practice, to post in this room, to get feedback on anything and everything that you need feedback on. You have a plan with 2 trades, high probability, optimizes your chance of success. The only thing you don't have is the ability to recognize these patterns so that they're easy. And that's where the repetition comes in, guys. That is where the professionals are separated from the minor leaguers. The effort that you put into learning this software, the participation in class, guys, that's what's going to get you where you want to be. You don't get to be a professional day trader because you bought software. You've got to learn how to use it. You've got to learn how to swing that hammer. So when we come back in the second hour, we're going to go back through all the pictures. We're going to break them down into advantages. We're going to look at your whys and make sure you're reading your indicators properly. But before that, I'm going to go take 5 minutes. So I will be back in 5 minutes. When I get back, we'll get into the second half of class. Guys, post them if you got them. All right, guys, we're going to get back to it. So let's do a little chart read, and then we'll scroll up and start looking. Cool. So multiple contracts on a single trade. So Joel, are you wanting to enter with multiple contracts? You can hear me, but you can't see the screen. It is you, probably. Let me knock it down, Jen, and then bring it back up. Hold on just 1 second, everybody. All right, there's the reload on my end. Did that help? Yay! Always tell me. You're welcome. So, Joel, your ATM strategy over here will determine how many contracts. So, for example, I've got my KISS plan in here. So if I hit edit, you can see that my order quantity is 2. I could make that 2, 3, 4, 5, whatever I want it to be. So that's where your multiple contracts come in. The KISS plan has 2 separate profit targets. Let's do this. So target 1, whoops. Target 1, I don't like the red arrow. There we go. Has a 12 tick stop loss and a 10 tick target because it's crude oil. Target 2 has the same stop loss because the stop loss is always where the market shouldn't go, but it has a second contract. So what that does is if I enter the market, it gives me multiple contracts that come off at different levels. And that's how you'll do multiple contracts. Is you'll enter with 2, but you could split it and you could literally have 5 different scenarios for however many contracts. So you could come in, click OK, whoops. Profit target 3 must be greater than or equal to profit target, whoops. There we go. So I could get in with multiple contracts, Joel, as many as I want. That's 5. If I hit buy market, I'm still in 5. My stop still goes where the market shouldn't go, all 5 contracts. But I can divide these up and I can say, all right, that's going to be my big, I hope it's a home run. That's going to be my somewhere between the fib and the next. And I can come through and move these. And I'm not saying this is a trade, but that's how you're going to do it. Is that what you were wondering? And every time it goes up, if it goes up and hits a target, what happens, go up and hit a target, please. What happens is when it hits that first target, that target comes off, it goes to 4. If I hit my second target, another contract comes off, now I'm down to 3. If I hit a third target, another contract comes off, I'm down to 2. If I hit another target, now I'm down to 1, and like this, that's my runner. That's the one, all right, I'm just gonna go break even and see if it runs forever. And then when it hits break even, I'm out. Is that what you were wondering? I hope. Did we get that for you? Awesome, perfect, great question. I'm sure other people were wondering the exact same thing, so good stuff. But of course in the KISS plan, and let me go back to that, the KISS plan, we're just doing 2 targets, right? We're not overcomplicating. We're saying, let me learn how to put my stops in the right spot. Let me accept that the goal of trading is to get paid. I don't have to hit home runs, I'm on simulator. Let's get in, let's get out, let's start looking for the next trade. So, good stuff. Great question. And guys, that's one of the things that makes this classroom great, is when you guys ask just whatever's on your mind. All right, so here's Pete. And Pete says, Mark, check it out. I have a strong bottom. I have a termination condition that reversed the market. It gave me odds favorable momentum. And at the time of my entry, I hadn't quite reached the fib. So this one had the potential to break. I take the perfect entry right at the bottom of the window. I get paid at my first sign of trouble. And I get out right where the market is likely to stop. And guys, this is a beautiful trade. That is a 200 plus another 280. That's a $500 trade, guys. And that short little snippet, that's a $500 trade. Great job, Pete. And then Cav says, look at this, Mark. Both triggers are above the blue fib, so it's a clear path. I have odds favorable momentum. I pull right back to support inside of the triggers, and I take this trade without question. No reason to have a 6-point stop there. Cav says, I know, Mark. I just had to move it to where the market shouldn't go. And Cav lost this one. It was perfect, and he lost. It was every advantage, and he lost. It was the perfect entry. It was momentum. It was a clear path, and he lost. And guys, this is one of the greatest things. When you accept that every now and then they're going to get you, and when you force them to go where they shouldn't go to get you, it takes all the stress out of trading. Cav, would you take this trade again if it's set up? Is there anyone in the room that wouldn't take this trade? This is your trade, guys. This is the one. This same look 10 times. It's going to win more than it loses. Watch this. I'm pulling from the spreadsheet real quick. Odds favorable, clear path, pull back to support, winner. Let me find longs here. Odds favorable, clear path, pull back to support inside of triggers, easy winner. So it's not the one time. Even in the spreadsheet, watch this. Odds favorable, clear path, there's a loser. You have to be willing. You have to be willing to put yourself in the kill zone to be victorious in battle. Thank you, Sun Tzu, for that little bit of wisdom. Great trade, Cav. I would lose that one with you all day long. And Cav said it doesn't deter me because it's going to set up again. And I'll be able to find it. And absolutely beautiful. Termination. All the momentum. Potential to break. Beautiful entry. Perfect exit. And Cav's up money. Even with the loser. Great job, Cav. And Joel says, Mark, have you seen it? Odds favorable. Potential to break. Pretty close. And Joel, your area inside of triggers is down here. There's your entry. You got in 1, 2, 3, 4, 5 bars away. So you added a lot of risk on this one. But with the large chart read, even with the late entry, you have the ability to make a little bit of money on it. And guys, this is what we do every day. Let's talk about rules. Let's see how you're incorporating them. Let's see if there's anything you could do better. Joel, on the NASDAQ, if these small triggers are a full bar away when you hit that mid-band is your entry. It's going to give you the least amount of risk and the most amount of reaction time. Guys, NASDAQ is not for new users. NASDAQ is not an easy market to trade. And I'm going to tell you, if you are self-proclaimed having trouble seeing your patterns consistently, NASDAQ might not be the best option for you. But you have to make that decision. I can't make it for you. And Lonnie says it's sinking in. Lonnie says it's sinking in. Lonnie, hold on. We're gonna adjust a little bit on your chart read here. Are you with me? Are you in the room? You had advantages you didn't even know you had. So Lonnie, price reached the divergence low. None of the triggers broke, and it reversed the market. Can we change that from weak bottom to strong bottom? Does that make sense? Price reached that divergence low. None of the triggers got through. Yeah, you had an advantage you didn't even know about. Strong triggers, odds favorable, absolutely. And then, so Lonnie, you put term. See how your small triggers are above and your large triggers are below? So Lonnie, we're going to call this a 50-50. And this is potential to break based on momentum and trigger location. Does that make sense? 50% of your triggers are through, 50% are not. What does that mean? It just means, hey, might need to manage. I will let the small chart decide if I enter or not. And what does that mean? We're already missing the clear path. And look at your small chart, Lonnie. You've got strong triggers. You've got no divergence. You've got a clearly defined entry without a lot of risk on it. This is the perfect 50-50 entry. And you've got room to get to trouble. So Lonnie, when I look at this chart, I have to steal it. And I have to go to my spreadsheet. And I have to drop it in there. And I have to call it Lonnie's perfect 50-50. So Lonnie, if you're wondering the best way to take a 50-50 and you want that to be in your plan, drop that picture in your plan. That's a great learning chart. Beautiful trade. And I like that when you posted it, you're like, I need a critique on the situation. It worked, but was this a good idea to trade? And then Lonnie, do you notice how if you write your rules on there, you find out that it was very much a good reason to trade, that it was a perfect trade when you go through and you kind of identify all the elements going into it. I love it. Beautiful, beautiful job on that one. Joel. Would this be a clear path? Did price reach an area? It did. Did the triggers remain above? They did. So Joel, this would not be a clear path. Because on the NASDAQ, that big, fast, crazy, psychotic chart, your large chart's a 34. And until small and large get below those pink 1-to-1s, your path isn't clear. Because the NASDAQ operates on a different set of circumstances. It is a huge 34 chart. These pink 1-to-1s are definitely a part of the equation. Does that make sense, Joel? Yeah, so NASDAQ is the only chart where those pink 1-to-1s make me nervous, where I respect them the same way I do fibs, yellow 1-to-1s, and divergences. Great question. All right, Boaz, double top, momentum, 50-50 trade. You take your entry at the high point, which I like, right? And you actually, it looks like you made quick money. And then it took you out. Don't trade into a 9:30 open market. And that's, a lot of people have that rule. And Boaz, this is a great look. It's, well, no, it's not. I apologize. Sorry it took me a second. Are you with me for the lesson, Boaz? That's your 50-50. Does everybody see it? The smalls are through, but the large are above. Do you guys see how that fib has the potential to break? Give me a Y if you guys see that, because we're about to have a great lesson here. So here's what happens. Here's what happens. I see that fib. I call it a 50-50. I'm so focused on the potential of that fib to break so I can take my trend trade, I completely missed the fact that price reached a divergence low and my triggers are way above it. And that is a textbook termination. And Boaz, that's your untradeable bounce, my friend. Does that make sense, everybody? I'm so hyper-focused on the potential of this fib to break that I forgot to see price reach this area with all my triggers above it. And when I say untradeable bounce, there it is. His stop made all the sense in the world for a high probability trend trade, even a medium probability trend trade. But because of the termination, we got the bounce and it got him. And I don't think that it was the open market. I think it was the termination condition, personally. The same way this termination created a big bounce, and that one created a big bounce. Pretty cool, right? Guys, sometimes we miss reads in the heat of battle. I do. I still do it. I still take trades and go back and look at my picture and go, oh, son of a gun. The heck was how did I miss that? But you do sometimes. That's why posting in the room is nice, I think. All right, Cav. Let's see what you're doing. You're welcome, Boaz. Done it. I've done it. I've been there with you. And they came back and look at that. They retested. You had the right idea. It just already got to your target. And sure enough, they reversed it. And then you get odds favorable. Everything says up. That has the potential to break. Cav says, man, place limit order inside the large triggers. I'm not sure how the limit order got you on the way up, Cav. Maybe a stop order? Either way, with all that momentum, not a lot in the way, you get in right. You could have gotten in at the mid band, but you caught it on the way up. And nice job, you got paid. Oh, the little snapback. Okay. So you let it start to go and then put an order and let it pop, pop, and go. Right on. I like it. Good job. Momentum and path, guys. Momentum, no path. Momentum, potential. Notice that they all have momentum, though. That's the one I don't think I would do without. My wife asked me yesterday. I like to tell stories, guys. I hope you don't mind. My wife asked me yesterday, because we were talking about momentum and path and just, you know, because that's what married couples talk about. And she goes, which one would you do without? Like, if you could never have one of them, would you want to have momentum or would you want to have a clear path? And I don't have any idea why we were talking about this. And my answer was I would prefer to have momentum because momentum is hard to stop. And even if you take the wrong trade into an area, a lot of times momentum can cover your mistakes a little bit and maybe get quick profits and manage assertively. So that was just me. All right, where are we at? Odds favorable, clear path. Let me try and line this up. This is Jim T38. Nice to see you posting. All right, Jim, let's go through it, brother. Let me see the time here. 9:56, 9:56. So we are looking at right here is where things went south for you. It looks like where that retracement got a little lower, maybe not south, but push south. All right, so Jim, get off of there. There we go. Rock solid on odds favorable momentum. 100%. Great look. Small's above the large, large or wide. Life is good. This is a market where the odds are favorable for it to continue up. Would you agree? Of course you would. You put it on there. But Jim, then we run into your path is not so clear. your large triggers, 50% of your triggers are below the key Fibonacci area. 50% of your triggers have smashed through with odds favorable momentum. So what this means, this is not a clear path. It's a 50-50 look that tells me I'm not even gonna say I have, the fib has the potential to break, but it's not quite broken. Jim, can you give me a why if that makes sense? Awesome. So check it out. No divergence, strong triggers, like your entry. Stop makes sense if you put it in the right spot. I don't know where your stop was. It didn't get hit, which leads me to believe you may have followed the rule, stop goes where the market shouldn't. And then when you get a reversal bar, you can reduce that risk. So on this 50-50 look, one divergence is very often a heartbreaker. One divergence is very often a deal breaker on whether or not that fib actually breaks. Two divergences is almost always the kiss of death. So you held through the first one. I love it. You got paid. I love it. As soon as this divergence prints, and you know that it's true right about there, two divergences on a 50-50 look gives you the opportunity to get the hell out of that trade because it is so less likely to win than it is to lose. Does that make sense, Jim? Awesome. And I'm going to go through for everybody, not just you, Jim. How understanding what you're getting into helps you manage. Because if I'm looking at my chart and I say to myself, I have momentum, life is good, this is large chart, momentum. And then if I say to myself, but I don't have a clear path, it's only the potential. What I'm going to start doing is saying, first, I want a clearly defined entry area so that I can reduce risk. But more importantly, I'm going to let the small chart, which shows change first, not lose momentum. And Jim, you did it perfect. Super strong triggers, no divergence. He was going long. He was trading with the trend. He was trading with the momentum. He was trading with the potential to break. Lonnie, this is just like yours. He had no divergence. He had strong triggers, had a well-defined entry, had an intelligent stop placement. Everything about this trade is doing everything Jim anticipated, everything he hoped it would do. And then it was when the market gave the divergence, that was the first sign. Oh, momentum might be going away. Your small triggers get inside and below the large. Uh-oh, I'm losing momentum twice. Golly. And then another divergence. Whoa. Son of a gun. And now you're just relying on an entry area. And as you can see from Exhibit A, just an entry area isn't always the best case scenario. So Jim, I love it. I love everything you did with that trade. The only thing I could say is you didn't have to give quite so much back. And it's only a tick or two difference. But when a second divergence prints on a 50-50, guys, that's where you have to have that willingness to jump ship. And who knows, if it rolls and goes, you look for your next opportunity. So great picture, Jim. It's good to see you posted in here. I hope you got something out of that. You're welcome. All right, let's see. Clear path, yep. Not a termination at the blue fib. It's a target, Cav, right? That's not a termination, not till price reaches it. That's a target. So you've got momentum. You've got a clear path. But here's the challenge. That damn area is outside of the triggers, on the wrong side of the triggers. And guys, there's a couple ways to do it. And Cav, I don't know why you place an order above the midline, stop above the divergence line. and I'm gonna say this, and this isn't for Cav. Cav has a plan. Guys, once you get to the wrong side of the triggers, you don't know if it's going to be a mid-band. You don't know if for a magical divergence line is going to stop it. You don't know if it's the large chart. You don't know if it's this, if it's that, if it's these, if it's those. Once you get to the wrong side of the triggers, guys, there's no freaking telling. So one of the things people will do is large chart's perfect, small chart isn't. It's okay to force the market to go in the direction of your trade. It's okay. No, not a bad trade, Cav. You're on autopilot a little bit. With that look on the large chart, you were willing to risk it. Guys, if you're not sure, if you're like, uh-oh, rule number 3's not met. Rule number 3 isn't perfect. My entry isn't clearly defined. But that core, that foundation, those rock star elements, momentum and path are 100% in play. But my entry is a little sketchy. That reversal bar gives you a place to put your stop. That reversal bar will define your risk. That reversal bar says that your small chart is going in the direction of all the good stuff. So guys, if you have to use the language, my entry is not perfect, but my large chart is, it's okay to use a confirmation bar for entry. Because your entry is already where the market should not go. Does that make sense? The entry is already 4 to 5 ticks beyond the triggers, where the market should not go. Let's make it go in the direction of our trade. Let's establish our risk. And Cav, you give up maybe 5 ticks. But with this look, the expectation is the fib anyway. You've got tons of room to make money. Tons of room to make money. And I think that's one of the things that the rules do for us, is when you begin to say to yourself, this is my advantage, this is what I'm looking at, this is what's great, you really start to embrace it. And when your large chart looks like this, you're chomping at the bit for an entry. But entry is a part of it too, so if you give yourself that little advantage. Great trade though, Cav. Nicely done. And then the king of momentum and path, Ron. Everything's screaming down with nothing in the way. And guys, that is not odds favorable momentum. That's the beginning of a strong trending market. The market's moving slow, so he wants to get a couple ticks below anything that could create a bounce. And then just rides that momentum down. Base hits. Base hits pay bills. $100 trades add up. Did you guys know that at the end of the day, if you make $1,000, nobody knows if you did it in one trade or if you did it in 49 trades? $100 adds up, guys. Base hits pay bills. Ron's been preaching that lesson for a long time, and I love it. All right, you saw a clear path to the next fib, but could have waited for another confirmation bar. Why would you? You didn't even wait for one confirmation bar. Hey, Lonnie, this is what it looks like on a momentum trade. Everything is up. He doesn't have momentum. Jeffrey, do you see it? You don't have momentum, but you do have a clear path. You do have an area inside of triggers. So let's go back to that picture. Jeffrey, you didn't have momentum, but you had a clear path and an entry. Is there any reason why you can't get into that low risk entry and just manage it if something changes? Great trade, Jeffrey. You had 2/3 of your advantages. You had a beautiful entry. It's super low risk. The only thing that I might say is without momentum, doesn't it stand to reason that the market could retrace? That anything can happen at all? Jeffrey, what's the goal of trading? Get paid, right? To make money. Why not make money when it's not perfect? Protect yourself the way you did. Let that second one do the work. Let that second one be your lucky break. Because if you drop $100 in your account and you're break even, nothing bad can happen to you with that loss of momentum. Just something to think about from a management standpoint. But Jeffrey, again, dude, I gotta say it. You're with the trend. You're recognizing the path. You're not fighting anything at all. Would you say that this is easier than what you were doing last month? You think? Yeah, for sure. Great job, dude. You can teach an old rocker new tricks. Paul says, check it out, guys. Weak bottom, strong triggers, potential to break. The only way he's willing to take that trade is if it comes from the lowest risk spot. And he manages to get paid. And then Jim T38, there's that second divergence. That's the one that can push that market down a little bit. Paul knows it. He's out of the trade. He says, I'm not going to wait for that. My money is worth the best of the best. All right, Bob, be the man. That's a weak top. Yeah, it is. That's odds favorable momentum. Yeah, it is. So when price cleared the decision-making point and you had momentum on both charts, you just jumped the fudge in and made money before momentum stopped, Bob? It's the chili dog. You fudged it a little bit on the large chart. Nailed it on the small chart. Great job, dude. All that momentum is hard to stop. When it's on two charts, it's harder to stop. But Bob knows that it could stop. So 8 ticks, $400 trade. How long did that take? A minute? Took maybe a minute. Great job. All right, Joel, I love it. You got the KISS plan up. So let's see what we have. No termination that can reverse the market. Strong triggers. No termination. Pull back to resistance inside of triggers. They went without you because you missed your entry, right? Just want to make sure you recognize that, Joel. They went without you because it was the right trade, brother. Would have made it easier to hit your $100 right there. And it's pulling right back to resistance inside of triggers. We'll see what happens, but your stop is in the retracement zone now. Joel, I love everything about the trade. I have to tell you, this is why great entries make such a difference, because your entry should have been 16, which is 7 ticks higher than where you entered, which means that 1 tick below your entry should have been your $100 break even. Does that make sense? And Joel, reaction time takes a little bit sometimes. But when I talk about great entries, minimize risk. When I talk about great entries, make it easier to get paid. This is a prime example. It's a great trade with just a late entry. And now you're in this trade and your stop is right in the retracement zone. And I'm not sure how that ended up. I hope the mid-band bounced and went down for you. But it's a good looking trade. Nicely done. Let's see what Ron did. Uh-oh, pirate trade. Not a trend trade. Yarr. Price reaches Fibonacci support. None of the triggers break. Absolutely no short trades, says Ron's brain, because it's a termination condition. Ron also says, well, divergence right from a fib with a large chart termination, it's likely to create a little bit of a push. He lets divergence print. He's on the correct side of the small triggers, and he rides that little wave right up to the reversal, just below the reversal bar marker. Guys, this is counter everything. This is counter momentum. This is counter trend. This is not trading from areas. This is a pattern. This is a pattern that Ron has studied a lot, that he has taken a million pictures of. And he said to himself, when the conditions are right, I can grab a little snippet. Guys, this is the recipe for financial suicide if you don't do the work. Ron's done the work. I can't stress that enough. Ron's done the work. And when you do the work, you start to see the patterns. Nice stuff, Ron. All right, there's all our pictures. Good job, everybody. Let's see what the market's doing. And Lonnie, I'll explain the chili dog in the final hour. Can I point something out, Lonnie? And please don't get upset with me about this. You're relatively new, and Lonnie, I'm just gonna say it. I'm gonna call it what it is. You're really experiencing about 32 flavors of kickassery by keeping it simple. You're focused on some simple advantages. You're starting to nail your entries. You're beginning to get paid on these trades. Would you agree? Of course you are. But it's not second nature yet because you're taking the perfect trade and you're asking me if it's the perfect trade. And that's okay. That's what I'm here for. But Lonnie, if all of this isn't easy yet, why do you want to find the other trades? And I'll talk about it. But why do you want to find more when that's not easy? Why do you want to give yourself more options when the best option is working great for you, but you're still learning it? We'll talk about the chili dog, I promise. But guys, I'm going to tell you right now, the more trades you add as a brand new user, the less likely you are to take trades correctly. Just throwing that out there. All right. Strong triggers. No termination. It's true, isn't it, Steve? Because we've all done it. That's the thing, is we've all done it. All right, thought I had to enter after the confirmation bar since it was leaving without me. Also, I had to lower my stop loss at break even after the first target because of the blue fibs. Area inside a favorable large trigger. So it didn't get you. Right, Joel? It never gave you an entry. And you said the buyers tried and failed. And this is what I want you to recognize about your entry. And so one of the things that I do, English Lit major guys, is I try to put a story to a look. I try to put like what I think is happening in my brain because it helps me work things out. So everything says down, the path is clear, life is good, nothing in the way. Oh my gosh, this market is more apt to go down than up. And Joel says, here comes my reversal bar. I know exactly where my entry is. I know exactly where my entry is. And then it didn't get there, right, Joel? And you said, well, then I'm going to jump in. So I call this the JTFI, the jump the fudge in. And Lonnie, I'm not beating you up for it, man, but one of the things that I do, maybe it's subconscious or whatever, is I try my best to wrap my arm around you guys and protect you from yourself, because I was so... When you're John Novak's little brother, John Novak sees every movement in the market, and I tried to trade like him, but I didn't have the reps. I couldn't read the charts like him. So when you start seeing everybody else doing something, you feel like you're missing out, right? And you're not, because the goal is to get paid. You're doing great. We'll talk about it. You'll get there. So what you did here, Joel, this is Ron's trade. Odds favorable momentum, away from the decision-making process. You just jumped in and you rode the momentum down. Right on. I don't ever want to overstep, right? So, Joel, the one thing I would say is with weak triggers right at a fib, what made you believe that the market was going to go down another 3 points? Is that a predetermined target? You didn't believe that it would? Then why would you put a target there? Did it bounce off that fib with weak triggers? It's starting to. Okay, but I'm asking you, how did you choose your second target? Is it preset? You've got a 7.5 point second target? Okay, so let's go through, and this is, I'm asking because I see this a lot. This is my preset target, right? 70.25. This is weak triggers right at a fib. Could we agree that this would be a better exit than hoping everything breaks with weakness? Does that make sense? I think we could agree with that, right? So is there any reason, Joel, that you couldn't click on that green line and push both targets to the fib? So instead of hoping you get an extra $75 and run the risk of a full reversal, you just capture 77 to 72.50, right? So what you're doing is you're saying, I'm a chart reader, and I know that because of momentum and path, I want to enter, but I also know where the market's likely to go. And I know where it's likely to stop, and I know where it's likely to bounce, and what an outstanding place. What an amazing place to take profits. Whoops. That's my untitled workspace, guys. I forgot to close it. There we go. So I want to see, just for grins, Joel, what time frame, what time zone are you in with yours? On your computer? Are you central or, okay, so that would have been about 7:45. All right, I may not be looking at the right chart. Was this today? 8:45 Central, 9:45. Hold on, I'm doing math wrong. Math hurts. All right, so there it was right there. And it did break, it looks like. It did ultimately break. But I like to go back and look at things too. So there was your bounce. I'm assuming that's it. There was your bounce. There was a big retracement right back to the trend trade. Oh, market replay, right on. I think just that willingness to get paid is where I was going with that. It's a great trade. But you see how once you understand momentum and path, you'll find a way. This didn't fit. It's not a trend trade. It's a jump-in trade. But the fact that you waited for the down, and I'm sorry, this is the part of it that I skipped. So check this out, Joel. Everything says down, everything is strong, life is good, it's cranking to the bottom. Oh my goodness. And you don't get your entry. But the buyers tried and failed. Does that make sense? The buyers tried and failed. And you got in after the buyers failed. And that's what I wanted to point out. I love that. They tried to push up. They failed. And you said, sucks to be them. I'm going short. I like the way you took this entry. Because you gave it the chance, and when it didn't, you got in. Hey, Alex B, longtime member, first-time caller. I love it. Here's a before and after trade. I don't know why I lost. Let's see if we can find some clues, Alex. What do you say? Does that make sense, everybody? Large chart is screaming. The only indication of a buyer fight was 2 bars up, and then they failed miserably. Joel, I love everything about your entry. I wanted to throw that in there. But you have to be ready for them to still make it to their target, or to that bounce point, which means stops have to go. If you go above the reversal bar, you run the risk of getting stopped out if it turns into a trend trade. But it never did. Well, confirmation isn't safety, Joel. Let me rephrase that. This isn't confirming anything. If it's coming from the area where the rules are met, it's confirming. Arbitrary reversal bars in the middle of nowhere are not confirmation bars. This is an up and a down in the middle of nowhere. A confirmation bar would have come from an area inside of triggers. Does that make sense? Otherwise, you could say, oh, that confirms the short. No, it doesn't. The rules aren't met, right? That confirms a long. No, it doesn't. The rules aren't met. Cool. So I realize that I'm not clear on that sometimes. All right, Alex, before and after. So Alex, first question, why? Why did you take this trade? So one of the things that you'll find, Alex, is I can't give you feedback if you don't tell me what you're doing. So let me see if I can decipher. I feel like I can. I'm getting pretty good at this stuff. You have market flow charts everywhere. That's okay. We're crude oil, so this is your 5-1. All right, so I'm going to annotate your chart for you. Oh, they're on the after? Okay. Cool. Thank you for that. Hold on, let me find them. Okay, but there's still no reason why, Alex. It shows me the loser. Am I missing your explanation? That's okay, so check it out. We'll do it together. I try not to be cranky. No worries. So I'm going to take a picture of your picture, Alex, and we're just going to talk through it. My snag is dragging its feet. Gotta be bigger than that. All right, here we go. So we're gonna start on the large chart. And Alex, you've been in my room before, right? You know that the first thing I always ask is, do I have strong triggers? And the answer is yes. Smalls separated from the large, larger wide, space between. You have a market where the odds are favorable for it to continue up. But that's just rule number 1. So then you have to ask yourself, do I have a clear path? And the answer here, Alex, is no. And let me show you what I mean. So the recipe for a termination condition, and this is, I'm a firm believer that language is important. So a termination condition means price reached an area and the triggers stay below. Potential to break means the smalls got through the trouble area, but the large are still below. So when we look at your picture, divergence high is a trouble area. Fibonacci resistance is a trouble area. So what you have here, Alex, is what we call a 50-50 look. 50% of your triggers have made it through, 50% have not. And what that means is that your path isn't quite clear. Does that make sense? And it doesn't mean that you can't take a trade. But, and let's go to this picture. This is why I love this picture. I think everybody should build one of these and put it on their desktop, like just print it out. So Alex, what we're recognizing is that you don't have the clear path yet, right? So we're relying on momentum and a sexy entry area for this trade. Large chart's giving you everything the large chart's going to give you. The large chart has told you that you have the potential to break. The large chart says you have the momentum with the potential to break it, and you're good, right? So your small chart becomes your tiebreaker chart. Well, one divergence is a loss of momentum. So I'm going to take some of that momentum out of the equation. And now this is what you're working with. You're working with momentum and entry area. A second divergence and smalls inside of the large. Now you're working with entry area. One divergence is pretty bad on a 50-50 look. Two divergences is typically the kiss of death. So if you had taken this first trade right from the fib, right inside of the triggers, you had room to make a little money before things went south. But what you did is you actually entered that one without enough momentum left in the market to really break that area. Does that make sense? The short answer is you lost because the sellers took over and pushed the market down. But your indicators gave you a lot of red flags, letting you know that maybe it's not going to work, or maybe they're going to push lower. And it may still go up eventually. But when you have that 50-50 look, when you identify it, you can literally say to yourself, my path isn't clear. Let me not sacrifice momentum on either chart, and you have a better chance of that area breaking. Does that help a little bit? I hope. It's a great look. I mean, you're coming from a termination. It reversed. The momentum is outstanding. Large chart says, wow. Small chart said, Alex, let me show you some of the change you can't see happening on that large chart. It's a good look. And this right here, that first pullback to the fib, you can see it right there. That goes from 55 to 75. That's a $200 stretch before it turns around, which means you can make at least 100, 150, go break even, and if something changes, not give it up. And if nothing changes and it keeps going, you find that 69.80 fib up above. So knowing what you're up against is going to help you use that small chart to refine just a little bit. Great job, though. And this is where I think market flow is a little deceitful, because market flow gave you signals right from the wrong trade. So it's imperative that the Renko bars tell you that it's time to go. And then let market flow be just a little bit. But even market flow, if you look at it, it developed odds favorable momentum against you. It gave you a high volume area right off of the resistance that hadn't broken. A lot of red flags from the market flow chart too. And that's just based on my ability to read that chart. Great stuff though, man. Thank you for posting in here. I hope we see more of it. I like it when you veterans come in and say, you know what? I may not know everything yet, and I still don't. I learn every day. Alex, I send my brother pictures every day. I ask questions every day. I hope nobody believes they are going to outgrow this. All right, this is a pattern I'm learning is a painful one. A single entry mid-band just outside of the large triggers hurts a lot. I fall in love with the momentum on the 13-2, but when it's just the mid-band and it's not inside, it doesn't work. Well, it works less often, right? Once you get to the wrong side of the triggers. Have I said that yet in this classroom? Once you get to the wrong side of the triggers, who knows? So Paul, you could have taken the confirmation bar, right? Joel, was it you that we were talking about that? Large chart is sexy as all get out. Small chart isn't. Force the confirmation from the area you're hoping holds. But even then you get 3 divergences, right? Higher divergence. It says no. It's still a loser, and it's pretty much the same loser. But that's why rule number 3 is so important. And Paul, thank you for sharing that. And guys, Paul drops winners in this room all day long. And the fact that he's willing to say, man, I know that's not my best entry, but I fell in love with the large chart and it didn't work. How do you know where to put your stop? I mean, you certainly don't want to put it all the way above the fibs. That's huge. And look what it did. All the way to that mid-band. Great stuff, Paul. Thank you for that. Joel. Favorable momentum. Not a good bottom. I like this. So Joel, odds favorable. I wish you guys would talk about your path. Most people, maybe not you, Joel, most people will omit whatever rule they're either not identifying or breaking. So I'm going to ask, is it a clear path? Is it a termination? Or is it a 50-50? What do you think, Joel? And I'm just going to get you in the habit of saying this because it lets you know how you have to manage it. No clear path. So is it 50-50 or is it a termination condition where you got in? Price didn't reach the area yet, right? 50-50. So let's go to entry. There's a pullback to the triggers. You're in 2 ticks above it, maybe a little high. Oh, you get in on the confirmation bar. What did it do at 77? When price reached a divergence high with none of the triggers through, after 1, 2, 3, 4, 5 divergences in the same price range that didn't break, Joel. Okay. So Joel, I'm going to ask you, why do you have the checklist? Because you didn't have a strong bottom. You had 5 divergences in the same price range. None of these broke. It only had the potential. So is the checklist helping you? If you don't follow it, does the checklist help you? I guess that's the question I'm asking, guys. If you give me a life preserver but I leave it in the boat, I'm still likely to drown. Oh, shit. That's my bad. Hold on. That's my bad. So this was a no, and that was a no, but that was a yes. So, okay. Do you see how if you're going to have a checklist, if you're going to hold yourself accountable, Joel, hold yourself accountable. Be willing to miss it. Because, man, Or if you're going to not follow the checklist, don't bother putting it on your chart. Talk about what you saw. Hey, I know the checklist says this, but with a weak bottom, with only the potential to break, with 173 divergences, I really wanted it to go up. And it did, right? So it's teaching you to break your rules, is what it's doing. It's teaching you that with a weak bottom, you're still willing to take this trade with multiple divergences. And it's less likely to work. Not busting your chops, Joel. That is, you probably have a grill with extra parts laying around from when you put it together too, right? Awesome, Lonnie. Have a good one, man. Enjoy your afternoon. Men hate instructions. And I just put that in there because this does no good if you don't follow it. That's all. That's for everybody, not just you, Joel, I promise. That's me talking to myself too, because I have a checklist too. And when I go against my checklist, I lose more than I win. Cab, take care. Has anyone else found themselves in that position that when you break your own rules, you lose more than you win? And guys, it's going to take a horse kicking me in the head to get me to believe it. Still break rules because I form opinions. And one of the worst things that can happen is being rewarded for breaking your rules. All right. Joel. Termination. Momentum. Notice that this one you didn't even talk about the termination condition that you were trading into, the one-to-ones. Never even addressed it. Didn't even talk about momentum on it. So Joel, not only did you go from not discussing path and momentum, and then you didn't discuss path, and now you're not even talking about it in 3 pictures, and you're trading directly into a termination condition. And you still have your targets on the other side of termination conditions. It's human nature, Joel. Yeah, me too, Ron. I'm not a rule follower by nature. So, Joel, if this were my chart and you were reading it, you would say, hey, Mark, strong top. Awesome. And you would say, hey, Mark, momentum. Very cool. And you would say, Mark, do you see the termination? And I would say, Joel, yes, I see it. And you would say, why did you trade? And I would say, because with that momentum, no divergence on the small, strong triggers, low risk entry, it's worth my money because of the advantages to see if it gets to the fib. I'll manage assertively. And that should be the conversation that you're having with yourself. But when you come back and look at this chart, what you're going to do is you're going to say, I won. That's all your brain is going to see, Joel. I made money. Look at me. This is awesome. This feels good. Dopamine, serotonin, yay. And your brain's going to say, F these termination conditions. They don't affect me, right? But if you go through all of this, I've got a strong top. My momentum is amazing. I see the termination. I know it's there. But my small chart gives me the opportunity to take a really low risk entry to see if that momentum pushes me to trouble. And I'll take one off at trouble and get to a break even, right? You're up $300 directly into an area that could stop and create a rapid untradeable bounce. Doesn't it make more sense if you're going to take a chance, get paid, on at least half of them, and then let hope take over. I like the trade, not lying. But I think the fact that you are omitting more and more annotation as you go along is going to bite you in the ass eventually. Just a thought, maybe. Might be my experience talking. All right, odds favorable momentum, absolutely. Both charts. Clear path, absolutely. Missed the best trade. Oh, you got stopped out at support inside of triggers. How did you pick your entry? What made you feel like it wasn't going to go down to the mid-band inside of triggers? I like it. Everything says up, and you took a shot at up, but you got in on the way down to the trend trade, and it just didn't go. Is that a down-up pattern that John Novak teaches? Oh, you just get in off the large triggers? Okay. It worked. With all that momentum and path, it worked. Nice job, Alex. Good stuff. I like it. Guys, there's going to be days where it feels like I'm busting your chops. I'm not. Remember, consistency. Doing the same thing over and over so that you can create an expectation, right? There's a strong top. It reversed the market. There's odds favorable momentum. I love it. There's that damn termination condition where, Joel, if you choose to trade into it, you know that it's there. You know you might need to manage a little more assertively, right? Or you could wait for the small triggers to get through it and trade the potential of it to break. Or you could let everything get below it and wait for a clear path. Those are your options. I don't tell you guys which option to take. But you'll start thinking to yourself like that. Let's go to another chart. Okay, I'm brand new. I open my chart. I look at it. And there's nothing there. And I say to myself, well, those are weak triggers. That's a clear path. I don't have any areas inside of triggers. Hell, I'm missing 2/3 of my advantages. I can't take that trade. That's how long your chart reads will take. And all I did is run down the line. I don't have momentum. My path is clear. I don't have a well-defined entry. I choose to not take the loser. It's almost too easy, isn't it? If you keep it that simple. So Joel, when it's perfect, you annotate. When it's perfect, you take the time to write it out. When you know you're breaking rules, you don't. Oh my gosh. Congratulations on being human, Joel. I love that. I did the same thing for so long. I'm just glad it's not me. This is my thankful smile on my face right now. Look at this. Strong bottom. Odds favorable. Nothing in the way. Perfect entry. Nope. It wasn't the perfect entry. The market was going past the triggers, so you waited for confirmation. Brilliant, Joel. Perfect execution. Rule number 3 wasn't perfect, so instead of hoping, you confirmed. Nice job. Did it go the distance? I love you guys to show me the end of the trades. Okay, so what did it do? You guys should get in the habit of showing me start to finish because, Joel, we got to learn to manage too. Where? Did it print a divergence? Did it have multiple divergences? Okay. Did you know that from 75.25 to 77.25 is $100? Easy to put in the bank. Did you know that when your large triggers roll from green to red and the smalls are below it, This is a sign of change, right? Your small chart's trying to reverse. Little context clues that it's time to get paid and protect your investment. You're getting good at protecting your investment. Nothing wrong with getting paid. Nothing wrong with getting paid. I took a trade this morning, Joel, and I had the same thing. I had my targets out here. I knew where the market was likely to go. But I also knew, and I'll see if I can find the picture. I'll show you. Because I take pictures of everything. Everything I do, I take pictures of. I knew where the market was likely to go. But I knew that this could create a bounce. And I was only trading one contract on this one. So I'm not willing to lose, right? Into it. But if I were two contracts, Joel, taking that exit at 49 was like $250 on my first contract. I was up $250. I gave 200 of it back, hoping the market went to where another chart told me it was likely to go. So I protected my investment, and I'm very comfortable with my management. I have a plan. But on two contracts, it's okay to get paid at trouble. It's okay to put money in the bank and then come back to it, right? Because there's always another trade. There's always another trade. I was pining over the idea that I missed this one. I had to go say goodbye to my wife. It was perfect. It ran all the way to where it was supposed to. But I got the second one. They came back for me. They always do. They always do. They love us. Weak top. Smalls aren't through yet. Can't even call that potential. They didn't smash through. And did you guys know that from a weak top, a mid-band with fibs is more likely to create a big ugly bounce up than it is to just break arbitrarily? Whew. Oh man, didn't get you on the trend trade. We still have momentum. Right? We do have path. Uh-oh, I don't have stops. It's already gone where the market shouldn't. You guys see it though? If you were going to take it, 54.50, that's 5 ticks. Let's see if it gets the 5 ticks. I've got momentum. My path is clear. I've got weak triggers and divergence. That was 5 ticks. Hold on, where's $100? Sell 94, 92. It's probably, it may stop me out. Let's just see what happens. There we go, it got me. But that's it. Not the best momentum, but still outside. Path was clear. Had one line right at the top of the triggers. Is it worth 5 ticks? Is it worth 5 ticks? I think so, all day long. And then once you get to the wrong side, there's no telling where it'll stop. Good stuff. All right, guys, we've got about 20 minutes. What do you want to talk about? Cindy, how's Miami? You guys getting hot down there yet? It's getting warm here in Texas. I love it. Looks like Texas is in for a little rain. Are they? Maybe not us. I don't think we are. We might be. Oh, yeah. Rain tomorrow, rain on Friday, and then right back to beautiful. It's okay. We need it. Our lakes are empty here. Lake Travis is down like 60%. Ocean still has plenty. Yeah, it does. Yeah, it does. Tail into momentum, divergence, weak triggers, it pushed up. Now we're at the mid band. And the large triggers are below the reversal bar. This is what we call the gap, guys. And with this look, when price reaches a mid band and these triggers are below the reversal bar marker, especially from a bad bottom, price is more likely to close the gap back to those triggers than it is to continue up. Not guaranteed, but this is the exact look that sets up a mid band as a termination condition. Bob B, how's the day? Nanda, how you been? I haven't seen you post in a while. Muser, you killing it? Muser was the king of confirmation bars. You guys that are taking confirmation bars when it's not perfect, Muser inspired that phrase. Texas the way you love it. What part of Texas are you in, Joel? I've got like 4 Joels. I confuse them sometimes. I think they're all from Texas. You're up in Dallas? Okay. I was last year. Down in Austin now. Or just north. I'm like South Waco, I think. Feels like it. Steve, how's the automated? Coming along? John and I are trying to do the same thing just for grins. I don't disagree, Muser. You pay a little for confirmation, don't you? But how often does it keep you from getting run over when it's not good? They're trying to close the gap, guys. There may be something to this pattern. Messed a teacher up at the driving range. He was showing a swing to someone with his back to me. I set a Bic lighter on the tee. Wham, it exploded. Guy spun around, looked. He said, wow, great swing. That's awesome. That's awesome. I played the other day. I played Monday. It was good. I got a 91 out of it. That seems to be where I'm stuck. Steve, John, and I are working on a little automated something, having some fun with it, just to see if we can. We've been so busy with all the work, we're like, let's do something for fun. Well, he'll never sell one. He'll never sell an automated system. But when you've got a pretty simple trading plan, it's just a pattern. They typically fail, so... It's snowing in Vermont. You can have it, Muser. You can have it. No, he has sworn that he'll never do an automated system for sale. Doesn't mean that we don't play every now and then. I don't know how to do it. I just help with patterns. AI intra-trade, cool. I think it's fascinating. If I remember right, when I was younger, the idea was that market conditions changed too much to have one set of rules work consistently over a long period of time. And I don't know if that's true, though, because we've been teaching the same rules for 25 years. We've had the same ideas for 28 years. I mean, I've got pictures. That's the edge trade that Nexgen started teaching in 2004. Let a Fibonacci area hold, everything reverses, sell a pullback, right? I mean, my goodness. That's been consistent. With all the momentum, let it break through and snap back. Momentum. When everything says down, Sell a mid-band, take it to Fibonacci support. I mean, we don't need anything new. The old stuff still works. It just looks different. It's gotten a lot easier. Steve, you got the big X next to your name. You remember when it was much more difficult to learn this software than it is. You got a theory on AI, UFOs? Oh, great. Yeah, that's true. Ron, is there someone I can call to get your meds? I might need your wife's number on speed dial. I actually like that theory. That would be a pretty cool premise for a movie or a short story. It would be pretty awesome. Guys, there's nothing to do right now in the S&P. Whoops, that's my untitled. Let me get rid of my untitled. Crude oil, the termination worked, right? Guys, remember when I said from a bad top, the mid-band with fibs is more likely to create a big unruly bounce? There it is. It's just a pattern. John Novak used to teach this room, and he would say stuff like that. And he's like, yeah, you know, no shorts even with the momentum, termination, mid-band, bad top. It's probably going to bounce up to here, and then they'll make a decision. And of course, I would go short at the mid-band and get run over and figured he had a crystal ball. Or it would come back and close the gap to those triggers, and I would go long at the one-to-ones and get run over and think he had a crystal ball. Everything is patterns, guys. The market repeats itself over and over. Terminations are always terminations. Mid-bands when the large triggers are a full bar away is a pattern. Divergence lows can always stop the market. Resistance can always stop the market. You guys want to see something cool? I'm going to take this picture here, and I'm going to go to the Nexgen site, and I'm going to go to the section with termination conditions. Joel, you're in Central Time Zone though, right? On your computer? Didn't we establish that? With labels. Amen, Ron. It does. It absolutely matters, Joel. Let me do this real quick so I can say, isn't this cool? Guys, this is from 2021. This is from an hour ago. Different market, damn near the same pattern. The market moves in patterns. Yeah, so Joel, what happens is this is my midnight. Right here. This line represents my midnight because I'm in the Eastern time zone. This is your midnight. About right here. Whoops. So every day, oh shoot, there we go. Every day starts at midnight. And this doesn't seem like it would be that significant, right? Well, we are, but my computer is set to Eastern because that's where the Nexgen servers are. And I want to be consistent with the Nexgen servers. So what happens is between my midnight and your midnight, Joel, these two pivots happened. And your software started calculating at midnight. And what it did is it measured every swing in the market. It measured every up, every down, Oh, where's my picture? There we go. And it created different time frames, synthetic time frames, higher time frames, lower time frames. So that one little ripple in the matrix, Joel, affects the calculator, which means that you and I may have different fibs because of the 10,000 calculations that create all these lines. Your concentration might have been 5 points higher, 5 points lower because of it. So one of the things you can do, and the same is true, let me get rid of these, remove all my drawing objects. So here's my fibs, and these are going back 10 days. I'm going to put it back 5 days and let it calculate. And guys, I'll be right back. I need to let my dog out, but let's see how the fibs change. How did we do? Does it look different? Let me line up the time stamps here. So that's the midnight down to 4 a.m. And that'll be the midnight down to 4 a.m. So 5 days versus 10 days is a little different. The fibs are a little different, not a lot, 5 days, but they're still, the price bars are the same. But the calculations, you see how they're, I don't know if you can see it from there, but they're just a couple ticks off, not a lot, but a couple ticks off. So if you want to be consistent with me, you have to be 10 days back. You have to be in the Eastern time zone. But I don't know that it matters. Some people, it's a little bit of a Jedi mind trick when our fibs don't line up. Trade your charts, Joel, for sure. But I'm pretty sure the software gives you one change, one time zone change, before it violates you, thinking that you're doing something wrong. So if you wanted to change your computer, if it's not a work computer, you could make it Eastern. You'll notice my timestamps say that it's already 11:50 here, or 11:45. It's not. I'm just south of you. But I want to be consistent with the Nexgen servers. It gives everyone kind of this common ground. I think Jen, even in the UK, is on Eastern time zone, and she's 6 hours ahead of us. It's already bedtime where she is. She should be asleep. Clearly her parents are in the other room. She's probably talking on the phone to a boy. You know how they are. But it gives a little peace of mind when we look the same, I think. Oh, it was daylight savings. That's right. You guys are a couple weeks behind us. Isn't it wonderful? My whole disposition has changed since daylight savings time. I am a sun seeker. I love sunshine. Weak top, odds favorable, potential to break, perfect. Caught it up there, maybe, maybe didn't. Odds favorable, clear path, perfect entry, you get it on the way down. Easy money. Sunrise 4:45, sunset 9:30. That sounds amazing to me. That sounds perfect. Boaz, this is great. Odds favorable, clear path, perfect entry, get paid. That's the recipe, right? Rinse and repeat, rinse and repeat, rinse and repeat. Jen, when I was in Oregon, we were living in Oregon, my wife and I, it would get dark. It would start getting dark at 4 p.m. and it wouldn't get light until like 6:30 or 7 a.m. It was miserable. I don't know how you guys do it on the West Coast up there. It's bad for a brain. I like Texas. I like walking around in shorts and flip-flops in December. That's what makes me happy. There's a reason I'm down here. All right, guys.